Federal Reserve, inflation has been so high, less money in their savings accounts, less money in their investing accounts. What's up, guys? Welcome to another video. I'm going to talk about how the Federal Reserve is killing banks right now, and also what will happen next. Will the stock market crash? What's going to happen to your savings? And all that stuff. So, stay tuned. So the Federal Reserve, I keep talking about them because they keep messing stuff up. Well, honestly, it started right after, I guess during and right after the pandemic, when all this money was being printed and just shoved into the economy. And the Federal Reserve was not, they were not on it fast enough. That was horrible. So they waited too long to increase the interest rates. They basically, they just didn't do their job. They were too slow. And so that allowed for, they're all just hanging out here. That allowed for inflation to run crazy. And we kind of see some of the effects now of that with inflation. I mean, it's been high for over 2 years. And then on the other hand, since they waited so long to raise the interest rates, they had to raise them really fast once they actually raised them. So that led to, you know, they increased the interest rates at a faster rate than ever before in history, which by itself is crazy. And a lot of banks didn't foresee this, and so that's kind of why a lot of banks are struggling. You can see some of that in the SVB video I posted. Oh, it's not going too bad, actually. But yeah, so that is kind of a side note for what I'm going to talk about today. So a lot of the money that was in, for instance, SVB was money from tech companies, like tech companies and startups. Were primarily the customers of SVB. And why is that important? It's important because the tech industry in general did really well coming out of the pandemic. And then they've been struggling recently. And so they had to use more of their savings, like the money that they had saved up. Which honestly, that's kind of similar to how just the general consumer in the U.S. is right now. Probably have, you know, some savings saved up, but unfortunately, recently we've started dipping into our savings a little bit, which is not good. If this pertains to you, then I would strongly advise you to start budgeting to get out of that. It's just like a spiral that it's not good. Oh my goodness. But yeah, so the Federal Reserve, it's kind of their fault, this whole situation we're in. I'm not saying all of it, I'm just saying they didn't do things fast enough, and now both normal consumers and banks and pretty much everyone is suffering because of it. So they need to figure their stuff out. The thing is now, we probably won't see an increase in the interest rates, even though just a week ago they were saying that they absolutely had to. So it's a sticky situation. The best thing you can do for yourself is to steadily put money aside, like budget. I would say budget hard. Keep a strict budget. Set money aside and get ready, because the stock market will go down. It's gone down a little bit already, but you can, I should write this in all caps, stock market going down. I'm not saying it's gonna completely plummet, but it will go down just because, you know, people are a little more, there's a lot of fear in the market right now, and fear and investments just, they never do well together. It's gonna force the market to go down, and you know, hopefully it's just like, it's most likely just gonna be a correction, so it'll go down by a decent amount, but not too crazy. It's kind of hard to guess exactly, but I don't think we're gonna see anything like we did in 2008, that you know, everything just went south. So we're gonna hopefully be able to avoid that. I shouldn't say hopefully, I should say we will avoid that, because there's not enough negative things going on for that to happen in the economy. So that's good news. That means that you should, like I said, hold on to your money, save whatever you can. Oh, and don't blow up. On a serious note, try to find companies that are undervalued and just get a low average price of those stocks, and you could come out of this with a very, very strong portfolio that has, you know, you could have a lot of shares, you could have a lot of value in that portfolio, even if you don't have a ton of money to start with. You could start building that right now, and that's kind of, yeah, just try to use this time to your advantage. And all right, thank you guys for watching this video. I'll try to put up more content like this, and keep you updated on what's going on in the economy, and I'll see you guys next time.